Eccentric, eccentric, eccentric.
I'ma tell you this one time. All I want is to be mine. Can I see you now? Can I lay?
Eccentric, eccentric, eccentric.
Just wanna be here by your side. You make me feel and believe that we in paradise. 'Cause I don't feel the ground. No, I don't feel the ground. But I'm feeling right. I tell you what it's all about. It's make you feel this way. It's kinda like oh, you make me feel and believe you be nothing like what we look at. I look away from time to time. All I see to right now. Just wanna lay with you all night. Feel your body next to mine. Boy, I need you now. Don't wanna leave. I just wanna be here by your side. You make me feel and believe that we in paradise. 'Cause I don't feel the ground. No, I don't feel the ground. But I'm feeling right. I tell you what it's all about. It's make you feel this way. It's kinda like oh, you make me feel and believe me. That's the way that we that's the way that make me feel I be so sick of you niggas, y'all contradicting. I be so bold myself, yeah, you come and fuck me. I feel so ordinary, so when you around me. Treat me like corduroy, wear me out. Arguments, you can air me out.
Someone on a life, boy, you have some girl I rather style for your wife for your yard. Them thing them in a life, lucky she not stab me with a knife. And some boy, I fuck some ways, girl road. Half them a chase her around. How the fuck you a fuck some toad? And I walk up with it in a crowd. Hey, no girl me fuck, can't stand no drama. Me make me girl be that banana. Baby miss, she know them policy. After 9 o'clock she can't call me. After me no idiot, after me no idiot, she better know say after certain time don't contact me, We don't know what them a think. Treat your girl but she a go cheat as a play. Now you make a prick get the leak. Fuck your girl inna the kitchen, wash me dick inna the sink. Let that sink in. Can't violate man a band kingpin, So for you feel the pain, don't treat all of the girl the same. Someone on a life, Boy, have some girl I rather start for your wife for your yard. Nothing them in a life. Lucky she not stab me with a knife. And some boy, I fuck some ways, girl, I'm proud. Half them a chase her around. How the fuck you a fuck some toad? Then I walk up with it in a crowd. Hey, look girl, me fuck can't stand no drama. Me make me girl be that for the corner. Baby mistress know them policy. After 9 o'clock she can't call me. After me no idiot, yeah. After me no idiot, yeah. She better know say after certain time,
Tell me that you ain't doing enough. Tell me that you need more. Put you on your last breath, your last sweat, your last dime. Out of your fucking mind. Can't you see I'm fucking?
Man, it's too early. What the hell you do waking me up at 5:30? Why the hell are you worried? Play something that is very, very vibe-worthy. I don't want my mind alerting. People saying tweeting gonna make you die early. Have to have my heart hurting. Hold it on the side, that can make it die early. Only get your best attorney. Something's there, feel it when I heard it. Just release the spirit, let it flow though. Even out with one leg like Jojo. Me to the coast of long nails like Coco. Free throw for the throat goes. Even if I gotta do it solo. Even if I gotta do it with no promo. I ain't got my point across till we finally get across and pass the point. So there's a couple things that I gotta quote. Don't involve yourself in things you don't have to know. I ain't never question what you was asking for. I get you every single thing you was asking for. I don't understand how anybody could ask for more. Got a list of even more, I just laugh it off. I be going through things I had to roll. Celebrity drama that only Brad to know. Too many family secrets, somebody passing notes. Things I cried about, I found laughable. Little baby, these ain't laughing, no. Don't involve yourself in things that ain't laughing, no. The big man up here, they laughing, no. Don't involve yourself in things that ain't laughing. What up, y'all? Banger. Yeah. Yeah. Place to go until we kick, push, kick, push, kick, push, kick, push, coast. And away roll, just a rebel to the world with no place to go. And so we kick, push, kick, push, kick, push, kick, push, coast. So come and skate with me, just a rebel looking for a place to be. So let's kick and push and coast. Banger. Yeah. Yeah.
Payments burning into gold. Embers rising up into night. Up on my back, I feel the static below. Tripping the wire, surrounded in time. I see this as mystical, I'm sure that you know. See this as mystical, I'm sure that you know. Just say you'll be my firefly. Take everything or nothing at all. Just say you'll be my firefly. Take everything or nothing at all. Just say yes. Just say yes. Just say. Can't believe I don't why you trying to be my girl? Yeah. I can't believe I don't you have a man? Why you trying to be my girl? Yeah. I can't believe I don't you have a man? Trying to be my girl. I can't believe I don't you have a man? Why you trying to be my girl? Yeah. I can't believe I don't need trying to be girl. I can't believe I haven't made me. Why you trying to be girl? Yeah. I can't believe I haven't made you got a man. It's alright with me, my girl. We can do anything. Trying to be good. I can't leave. No, you don't. You haven't got me. Why trying to be good? Yeah. I can't leave. I feel like trying to be good. I can't leave. No, you don't. You haven't got me. Why trying to be good? Yeah. I feel like falling in love. I'm in the mood to fuck something up. Tonight I'm fucking something. I need some drink in my cup. Hey, I'm in the mood to fuck.
And if it's meant to be, then that's alright. It's the little things that get me high. Won't you come with me and spend the night? Just a little thing for you and I. And if it's meant to be, then that's alright.
Come on, say it again. You are. Here we go.
Hello. Welcome to Crypto and Assets. I'm super excited to be on this call today with myself and Gil, the partnership. We're back in action. So put a 10 in the chat. If you guys can see me and you can hear me, just want to make sure all of the technicals are good. Let me go ahead and pin myself here. Amazing. So super happy to be on this call today. We have a lot to go through. A lot's happened in the past 2 weeks with the markets in terms of equities, in terms of crypto and the decentralized space. And you know how we do on these calls, right? We always start the call off with what you need to know for the week in terms of the fundamentals as well as the technicals. And so let me go ahead and show the presentation. And let me just double check on YouTube that we're all good and live, because I want to make sure that that's working. So let me have a little look now and make sure we're all set. But I hope everybody had an amazing week. It's a new week coming into the markets, which is great. Okay, looks like we're live and ready to go. Cool. So we have a couple of things to touch on today. I'm going to share my screen and we're going to dive right into it. As you know, the first part of the call is going to be myself diving into a lot of the fundamentals, and then my boy Gil is going to come through with the technicals and some more stuff, maybe on the charts afterwards. So to start with, we have the S&P seeing record highs of 7,798. This is huge. As you know, the S&P is the supply and poor. Basically, it's the 500 largest publicly listed companies combined into one index fund. And so this is a big metric for where the market's going to go. And so I'm actually going to pull up TradingView here because I want to show you guys something regarding the S&P. So yes, we're at record highs. Now, the question is why? What catalyzed this growth? And so there's a few things. One, you can say the AI sector and industry with NVIDIA and the amount of buzz going through behind that, but also companies such as SpaceX. You know, these are all companies in similar industries, and so tech is really pumping the market and the positive expectation of where that's going to go. Now, this looks and sounds all great, but as we know, the market likes to rebalance itself, and as we know, growth can sometimes be unsustainable. And so there's a couple of things here that I wanted to mention regarding the S&P and also the interest rate outlook. So firstly, when you're investing in stocks, you're investing long term, right? Like 95% of us on this call, we have a stock portfolio and we're not looking to take, time the market, take it in and out every, couple of months, things like that. And so when we're thinking of that long-term perspective, as I mentioned to you guys, some of the index funds out there, you're going to get 15%, maybe 15 to 18% or so ROI every single year over an average of 10 years, right? So if you put $1,000 in, at the end of the 10 years, you're looking at like around a 15% increase year to year, which is great. Now, what that means is even though the market's at all-time high, it doesn't mean don't invest. At the same time, it doesn't mean invest all of your money and don't have anything spare in case the market depreciates at lower prices. So you want to find a nice middle ground. So when we're looking at the technicals here, and some of us are traders, it is so clear and evident to see, and Patrick Kenny spoke about this, the gap here in the 6,600 range. So evident to see that. And, if you're a trader, you'll understand that area, you can call it an imbalance, or you can call it inefficient price action, right? And so I can just label that here because I've got it on my save section here, IMB. So it's clear to see that that's a potential area for the market to rebalance in. What we're talking about there, though, guys, is we're talking about a 10 to 15% drop in the S&P. And if I get the ruler out and I come back down to this area and show you guys, it's a 15% drop. That's huge. Absolutely, it's massive. And so if the S&P drops 15%, what do you think happens to the tech industry? Meta, Google, maybe not Google, Amazon on that level, but specifically tech-heavy stocks. Well, we're going to see a 30% drop, a 35% drop. Why? Because everything sounds all well and good, right? When we're investing in these tech stocks and they're growing so much faster than the blue chips or than the kind of more conservative investments. If we go over to my holding sections like Palantir, incredible securities tech company, you can see how volatile it is. If we go to NVIDIA, same thing, you can see how volatile it is. But, when it comes to the S&P, that drop is going to have a massive effect on the entire market. Now, my recommendation is make sure you have some of your investments in now, but keep some for the drop that may come. And when I say may come, we're talking about a 70% chance that the S&P is going to drop down 10% minimum. That's my perspective. So if we understand it's very likely, we want to have spare capital ready to deploy into the market. And if you go to the Dow Jones and if you go to the others, you're going to see a similar gap, by the way, of an opportunity here. And all that's going to happen is this liquidity is going to get taken out, right? And then the market is simply going to come down really into these areas. That's what we're looking for, guys. So I want you to keep that in mind when it comes to when you want to invest or reinvest into the assets that you have or don't have. That's the first key. Now, secondly, I wanted to touch on the interest rate outlook. This is really, really important. So earlier this week, there was an announcement regarding employment. And so employment really affects the markets and macroeconomics. And so the expectation this past week was that employment was going to gain 80,000 jobs were going to be gained in the market. But the reality of what happened is that we actually lost 20,000 jobs. So we have an expectation of here, and the reality actually ended up being down here. Now, what happens when announcements like that don't reach people's expectations? Well, bearish movement is one, but also it affects the potential for interest rates. And we're going to have an interest rate announcement in the next, I think it's like 3 to 4 weeks. And so what actually happened when we found out that 20,000 jobs were going to be lost is the probability of interest rates being increased went down. Now, I'm going to show you guys where we can find this. You're probably thinking, well, interest rates are important. Sure, because if interest rates go up, it's now more expensive to borrow money. Businesses, it costs more, and individuals. And if interest rates go up, people want to save more because instead of them getting 3% of their money in the bank, they can now get 4% of their money in the bank. So, you know, the choice of spend money or save money, people go to save because the interest rate's higher, they get more in their money. So that's really what interest rates are, and it's so important because less people want to take loans out because it costs more money, XYZ. And so I'm going to show you where you can find interest rate expectation. If you go to CME, I believe CME is based in Chicago, but if you go to CME Group, guys, and you go to the markets and interest rate section and you click aggregated, which means combined probabilities, you can look right here. And the next interest rate announcement is the 16th of September, which is exactly, you know, just about under a month. And look at this. Current interest rate, by the way, guys, is between 350 and 375. So what it's stating here is the probability of interest rates keeping the same is 66%, rounded 67%. And the probability of interest rates going up is 33%. Prior to the employment announcement earlier this week, when people expected 80,000 more jobs and we actually lost 20,000, this was 50-50. It was a 50% chance of interest rates staying the same and a 50% chance of them going up. But ever since the announcement of 20,000 jobs being lost, now the probability of the rate staying the same has gone up. And the probability of rates increasing has gone down. Now, just to dive deeper into the effect of employment and interest rates and what it means for us, well, here's what it is. Let's use our brains right now. If 20,000 jobs were lost, which they were, and we found that out this week, well, what happens is that there's a greater risk of recession or a greater risk of negative movement in the market. Now, because there's a greater risk of recession and there's less inflation pressure, right? Because people lost jobs, not gained jobs, so there's less inflation pressure. There's less of a need for interest rates to go up because the government doesn't want people to save money. They need people to spend money. They need investment because jobs are being lost. There's less people with gaining income, so we need more people to spend income. And if you keep interest rates the same rather than increase it, more people are going to want to spend. This leads to a positive movement in stocks, in crypto, and in the market because we're actually wanting people to spend money. Effectively, it's like injecting money in the market. It's like when stimulus checks come, or it's like when quantitative easing happens, when they print more money, because we need more money in the market rather than less money because people are losing jobs. So that's why interest rates are likely to remain the same rather than interest rates go up. That's quite a complex concept, but I hope some of that made sense at least, because it's very important to understand how this works and why. So remember, interest rates going up, more expensive to borrow, less inflation, and it leads to less consumption in the market and more people being conservative. But if interest rates go down, then we're looking at inflation and we're looking at stocks going up, crypto going up, and things of that nature. So what do we like as investors? Well, we want our assets to go up. We typically like it when interest rates go down, right? Because that's more people spending money. So that's that concept out of the way. Individual stock analysis. Yeah, so there's a couple of things that happen with stocks. I mentioned a stock called Cerebras, which is an AI data company, and they basically declined. They declined like 9% or so. Write that down, Cerebras with a C. That's a stock that I would love for you guys to look into. And it's just another example of how tech stocks sound amazing and they're fast growth, but they're more volatile. So what does that mean? That means that there's more up and down movement, right? Like when the market's bullish, it goes up 20%. It's great. But when the market's bearish, you're going to see that 20, 30% drop too. Another sort of individual stock thing I wanted to mention is SpaceX. SpaceX. Now, remember, we literally spoke about this. We don't always get things right, but this was one thing that we were pretty spot on about. And remember when I spoke about IPOs? You guys remember this when we spoke about initial public offerings, companies that go private to public, and what happens, and the fact that when they go public, there's this like massive bullish momentum, and everyone's excited. SpaceX being $1 trillion company, and then look at this, by the way, IPO June the 12th at $149 approximately, and look what happened. The stock basically like it went up, I don't know, 75%. And everyone's like, oh my gosh, like this is crazy. Like, what a great investment. We said it to you guys. When an IPO happens, yes, price may go up a lot, like it did with Circle, with US, when that company IPO'd. But you know what happens eventually sometimes? It drops below the IPO price. And that's what SpaceX did. It then cooled off. It then rebalanced itself. And it then went down into the low 100s. And now it's at 139. And it had a drop this past week or so from 150 to 139. It basically had like it went further than that. It was 135. Yeah, so it's saying here that it had around about a 13% drop, 10 to 13% drop in the past week. So then again, like we said, when IPOs happen, be patient. Wait for it to drop below IPO price if it does. And you can have a stake in a game. Maybe you put 50% of your money in to begin with, but then be patient and wait for that decrease. Then you can put the rest of the funds in and reinvest. But remember, we're looking for that S&P to come down back into the mid 6,000s. So let's be patient. Let's hold on to some capital. If you guys want to know what I'm doing, is I'm putting money to the side. I'm saying I'm keeping it here because when that drop comes, that's when I want to dive into the market heavy. So the next thing we want to talk about. Oh yeah, physical commodities opportunities. So this was brought to me actually from Junior, the head of Powerhouse. And so, never we might trade silver, we might trade gold. But I never considered buying it like as an actual investment. And there is a website where you can actually purchase the physical asset itself. Now, remember the market sentiment and where we're at. We're very bullish. People don't typically go for safe investments when we're really, really bullish because they're willing to take more risk, right? They're more of a risk-on investor. They're like, hey, like I'm willing to get crypto. I'm willing to go into these smaller cap stocks because everything's bullish right now. However, when the market downturns, people want to go to safer assets. The things that they're used to, the things that's proven to provide a good ROI or wealth over the past 20, 30 years or so. And I decided I wanted to take action. So I decided to buy some physical silver. And the reason why is because it's a good long-term investment. It diversifies your portfolio. In your pie, guys, your pie, think of your portfolio as a pie. Okay, you have some crypto, you have some stocks, and variety of industries, variety of caps, variety of, layer 1, 2, 3, blah, blah, blah. But then also you're like, all right, maybe I have real estate or whatever, but then what about like physical items? Like maybe why not get some gold or get some silver because it holds its value. And also it's something that's tangible. You can feel it and it's not as what's the word? It's not as liquid, right? Like you can't like sell it immediately, get a cash, but like it's still something that you can add to your palette, to your plate. And so the reason why I went for silver over gold is because when we look at the charts, and it's a good thing about being a trader is, well, number one, gold's a lot more expensive, right? Like gold's like $4,376, but with silver, it's $64 here for an ounce, right? However, if you look at the ROI with gold from all-time highs, guys, we are like, I don't know, what is this? Let's have a look at the percent. We are From all-time highs. We're about 21.5% down from all-time highs, guys. So, you know, think of gold as like the Bitcoin of in the physical commodities world. We're about 21% down. But let's look at silver. Where are we from all-time highs? Wow. We're like almost 50% down. So gold, we're 21%, silver, we're almost 50%. What does that tell you? That tells you that there's a higher potential ROI with silver. And that's what I'm saying. Think of gold as Bitcoin and silver as Ethereum. Well, with Ethereum, there's a higher ROI. You're probably going to get there faster. Ethereum going from 2K to 4K going to be a lot quicker than Bitcoin going from 66,000 to 120,000, right? So I said to myself, okay, we're going to go for silver. And so I actually got some a silver bar. Let me have a look. Turn on silver bar. I'm actually going to search it. 10 silver. It was this. There we go. So it's this, and so it's just a little bar. It's nothing crazy. But as you can see, right, the pricing here, you can pay in crypto, you can pay in a check, you can pay wire, PayPal, blah, blah, PayPal's more expensive. And so it's super simple. You just add it to your cart, you put your address and your details, you put your method of payment, and that's it. And then boom, it gets physically delivered. And these are stackable, right? So if you know you're going to get more than one in the future, you probably want to get the stackable ones. They're so small, they're tiny. And it's a cool type of investment because, like I said, for diversification, the ROI. So remember when silver doubles, right, and it goes from $65 to $125, for example, well, this asset is going to do very similar because it's just the physical representation of the chart, right? And so just a little side note, when you do it through a wire, what was it? Yeah, when you do it through a wire, it's basically like less fees. It's like slightly cheaper. So that's typically the best way to go about it. And if you buy it in bulk, it's also cheaper as well. And I can actually show you guys, I'm going to show you guys one of them just so you can see. So this is what it looks like. This is what it looks like. It's really small. You know, if you look at the size of my hand, it's tiny. But it's pretty cool. It's you can feel the weight for sure. But you guys can order these and it's something a bit more old school, right? Like the way I view it is this, is I think it's important as we get older and as we build up our portfolios, you should have money in different plots and places. You should. Because especially if you've got responsibility, you know, you might have kids, you might have a wife, you might have a husband, you might, you know, whatever. Like, let's just say there was a world calamity, like, I don't know, you could lose your house, you could, whatever it is, guys, like you might have got defrauded. Like maybe, you know, you can't access your investments like online. Well, we should have something physical that's like, all right, if all else fails, I can sell this. I can trade this. Like, who knows? And it's not about having a scarcity mindset that like something bad's going to happen, but you guys get what I'm trying to say here. Like, it's nice to know that, all right, I can trade these 5 silver bars and I can get like 4 to 5K from it, like cash, like if needed, wherever I am at in the world. So, and then we can talk about like, you know, have some funds in America, but have some funds in another country, right? Like maybe you decide to put the physical silver or gold like in Mexico. You just keep it there and you put it with someone you trust, you put it in a safe. Like, these things are important, more important than we realize. So I wanted to mention that because it's a cool way to diversify. I'm sorry I can't see the YouTube live chat. So if there's questions, you guys can always message me. So let's zoom through this. That's what I wanted to mention. These last 3 are really crypto-based things. The Clarity Act, right? It's to do with stable coins. That was delayed in the Senate. The decision was delayed to September. So we're going to have to wait there for more clarity on the regulatory procedures of stablecoins. Now, the other thing here is Tether, which is, I believe, is the #1 largest stablecoin in volume. It completed its first full financial audit. This was done by KPMG. KPMG is top 5 law firms in the world, so that's great. And what they discovered with Tether, and I'm going to pull up the article here because the details are important. I want you guys to get good at research and understanding the details. You don't have to read absolutely everything and anything, but all you need to do is to find 1 or 2 nuggets, 1 or 2 nuggets. And this was the nugget that I needed to know. Tether's chief financial officer, his CFO, guess what they found? They found that their reserves exceeded liabilities by 6.8 billion. Their reserves for the stablecoin is 6.8 billion above their liabilities. Their assets surpass their liabilities by 6.8 billion. That means if there's a mad crypto crash, right? Bitcoin goes from 66,000 to 40,000. The market's bleeding. There's massive fear in the market. Well, we're pretty confident that stablecoin, Tether, meaning USDT, is not going to lose its one-to-one peg with the dollar. Therefore, your funds are safe there. Because 6.8 billion for those reserves to be gone, it's going to take something pretty astronomical. That's important to understand. Tether isn't our number one suggested stablecoin, but it's good to know that they have this level of security. For us, we recommend USDC or DAI, which is DAI. We recommend that as a safe haven for your funds. Now, the last thing here, Trezor customer info exposed. Yeah, so Trezor is a hardware wallet like Ledger. They're like competitors, Trezor or Ledger. I prefer the Ledger, a little bit more simple and basic for the beginners. Maybe for the intermediate advanced, you go for a Trezor. Pros and cons of both. They're both similar price, but different. Trezor and Ledger have different assets that you can buy, meaning different cryptos. So it's up to you. But with Trezor, some customer info was leaked, not the wallet addresses, not the private addresses to your private keys to your crypto, but your address, your name, and things like that. And with crypto, we benefit from anonymity to a certain degree. So the fact that address, phone numbers, and stuff were leaked, well, that means that some people, unfortunately, know people holding Trezors at their house address. That's very dangerous. So this is a good example, good demonstration that yes, you benefit from privacy with having a Trezor and a Ledger. Yes, you benefit from it being in a cold storage where it's not connected to the internet. Yes, you benefit from decentralization, but there is always still the possibility for exposure of information. This is why we try to take as many measures as we can. It's not to scare you, but it's to be risk adverse, to be smart about risk. This is why we might not want to have our Trezors or Ledgers at our home addresses, right? It's true, because what you sign up with, it's private, but if a leak happens like this, then that's exposed. So that's another thing I wanted you guys to keep in mind. It's now 12:30 Central on the dot. I hope you guys learned something from my segment. Put some tens in the chat for my boy Gil, because I know he's going to dive into some cool things. So make sure you're tapped in. And Gil, I'm going to pass it over to you, brother.
Yes, sir. Yes, sir. Appreciate you, bro, for obviously hosting the session today, actually, and also giving a lot of amazing game. A lot of things that Jean-Luc breaks down is like really understanding things that most people aren't talking about. I say that every single week. And when I say it, I mean it. So I think that's super important for you guys to take this information. If you're watching live, you're watching a recording, to be able to not just see it, but also apply it. Because remember, most people are only looking at what everybody else is talking about. But that's basically our mission here at Crypto Analysis, to look at things that people aren't talking about and really getting ahead. But what I'm going to be doing on my segment here is I'm going to be more on the charts, but there's a couple of things I am going to bring up that aren't necessarily on the charts. But I did want to start talking about crypto. I know John talked about a lot about stocks. I'm talking about a little bit of stocks with a couple of them, just things I've been seeing. But John broke down basically the same things that I'm looking for. So we're pretty much aligned with a lot of the things. You got to realize we're learning from like the same people, right? So we have, same ideas, maybe different small things, but we understand kind of where things are going. And really, when it comes to crypto, I think I said this on the last one that we did, is really just understanding where we're at, right? Like literally for the past, let me go on the one that I'm not really marked. Okay. For the past, like, I would really say, in my opinion, really the whole year. But if you wouldn't have just put up this summer, we can see that BTC, which is the leading of crypto, right, has been what? Consolidating, okay? Now, this is something to keep in mind, that sometimes when Bitcoin is consolidating or an asset is consolidating, it doesn't always mean the industry is, even though right now crypto is consolidating. But there is some shifts that are happening that I want to kind of bring to your attention. So sometimes when we have Bitcoin consolidate, okay, what happens is that it brings maybe different eyes to different things. The number one thing that I'm looking at right now is I personally, I don't know, but can we see Bitcoin go below here? I don't know, right? I think that's something that if it was to happen, it would be very quick. But I'm not really gonna go too much into that today because I talked about it last time. But really, what I wanted to point out is what is happening with maybe the altcoins, right? What are things that could happen? Because the thing is that the markets rhyme, but they don't do the same thing over and over again. And one thing that we saw BTC do its thing and create a bull run. People don't believe there was a bull run. There was a bull run. It was just with Bitcoin, to be honest. Other ones had opportunities, but really the winner of the last run was Bitcoin. So my question is, these are just theories. Okay. Right now I'm bringing theory and then I'm going to bring facts, right? Right now it's just theory. So take this as a theory. My theory is this. If we had BTC, okay, and we had BTC have a bull run, well, what if, right? Again, theory. What if we have an altcoin season that is a bull run and Bitcoin doesn't have the crazy 2, 3, 4x that it had in the last run? Now, if that was to happen, what would be some of the leading indicators? Number one, I want to bring up some new charts I haven't brought up in a while. So maybe some people have seen, some people haven't. The first chart I want to bring up is the Bitcoin dominance, right? If you go on TradingView, you can just look up Bitcoin dominance. And this is a chart, as you can see, there's percentages on the right, and it shows the dominance of Bitcoin versus all of crypto. As you can see, we reached a high. We reached a high of Bitcoin dominance of 65%. And since then, it has actually gone down. And one thing that I like that I'm seeing right now is that we have been bearish for the month of August, right? As you can see, it's a bearish candle, right? And as you can see, even right now in the week, which is closing tomorrow, we might be seeing an engulfing candle. And not engulfing volume yet, but an engulfing candle, right? Meaning that the market was bullish, and then this bearish one candle is bigger than the previous one, right? That's called a bearish engulfing candle. Now, for this showing me that the market depends when it closes, how it closes, right? But does want to continue going down. Now, what happens? What happens if the Bitcoin dominance goes down? It doesn't necessarily mean that all of crypto is going down. It could mean, and actually, what it does mean actually is that money is going elsewhere. In the same crypto ecosystem, money is just going elsewhere. So the next one we want to look at is Ethereum. And as you guys can see, it's usually the opposite of Bitcoin because Ethereum is the leading altcoins leader, right? So when altcoins are starting to pump, ETH is the leading of that avenue, right? And as you can see, Bitcoin reached the top and Ethereum reached the bottom. So April 2025. Yeah, around the same time, right? Like April was here, so somewhere around there. When Bitcoin hit a top in dominance, Ethereum hit a bottom in dominance. And that's that's what happens, right? But as you guys can see right now, we saw a shot up when Bitcoin saw a shot down. And right now, we're seeing it come back, right? We're seeing something that could actually bring Ethereum back into these areas. Now, as you guys can see, it just changes the percentages, right? Right now, it's at 10.5. It can go from 10.5 to 17%. So that means that if the money stayed the same in crypto, there's just more of a percentage in Ethereum than Bitcoin, or Ethereum versus the whole market, right? And that is what really is going to show me an altcoin run. And right now, this is actually a really good sign, in my opinion, because you can see in the last run, look at this, 2020, we saw this. So what was that? January of 2020, right? What happened for Ethereum? January of 2020. As you guys can see, January of 2020 was the bottom of this run, right? January of 2020 was the bottom of this run. So my question is, okay, could this be have been the bottom, right? Which was what, April of 2025. It's crazy. Same month, right? It's never a coincidence, by the way. Just saying, when you see that. This is 2025, right? April 2025. Yeah. April 2025. Okay? So this is the thing. If Ethereum made this pump, okay, with the dominance only coming here, what happens if Ethereum breaks what it hit? This is what I can see as the new top of Ethereum if we were to see that, which if you just look at the chart and you just look at like simple stuff, which means all-time highs could be broken. Hopefully this is making sense to everybody here, but I wanted to point this out because it's something you want to keep your eyes peeled about. Can we see an ETH run and not see a BTC crazy run? That's a very big possibility. Now, another possibility that I've been talking about is, yes, if Ethereum goes, alt season will run. But you also got to ask yourself, which projects, altcoins wise, so the Chainlinks, the Solanas, the Pipes, the Suis, all these that I have here, right? Which one of these will actually last? Now, most of them will run. So if Ethereum does run, they will run because it will just follow off of hype. But one thing that I personally believe seeing in the next 5 to 10 years is honestly the death of a lot of crypto projects. And that's something I've been talking about, and I will continue to talk about that. In order for crypto to really be at the level that we want it to be, that we can see it being, I personally believe there has to be a purge. There has to be the death of a lot of cryptos that maybe we've seen as an investment, maybe we've seen as a good one, but at the end of the day, the reality is the industry does have to shorten. The industry does have to shorten so then they can expand. And obviously, we live in a world where monopolies and stuff like that do exist. I know, there's things. Oh, you can't. There's a law for X, Y, and Z. That's not true. There's ways back and forth of it. So there is monopolization in every market, and I think right now it's already there in crypto, but it only has to be more in crypto, because there is a lot of monopolization in the stock market. Like, just being real, right? In every big market, there's a lot of monopolization. Things like gold, silver, there's only a couple of big holders, to be honest, right? So that's something that you really want to look at and understand. So my best piece of advice when it comes to crypto right now is to keep your eyes peeled, prepare. Yeah, obviously DCA, but honestly, I would say keep more of your eyes peeled with the bigger ones, right? So when I say bigger ones, and bigger ones, not just like in amount, yes, in amount, but also in use case. Like, you got to think about it like this. It's like in the stock market, right? Like, what companies would fall that would crash the economy? Like, if I was asked this question, what would you tell? What would you say? Maybe things like Apple, maybe things like Amazon, maybe things, you know what I mean? Like, those are companies that you hear and you're like, yeah, I mean, if Amazon went down, damn, like that would be huge. People use Amazon, like literally, I got a book today from Amazon, right? Right. So imagine people are ordering on a day-to-day. Like, imagine how much the economy is reliant or dependent or cycling money in the economy through Amazon, right? Think about Apple. Apple, everybody has an iPhone. What if Apple goes down? What happens? Everybody has an iPhone. Like, literally, we're living in an ecosystem where I have an iPad, I have a MacBook, I have an iPhone. Oh man, and this sounds terrible now. I have the AirPods and I have the Apple Watch. That's the whole ecosystem. I just need the glasses when they come out, right? I got the Meta glasses, but not the Apple ones, right? But anyways, you see how the ecosystem is there. So that's the same question you got to ask yourself with crypto. So for example, Bitcoin. Bitcoin is like the gold of cryptocurrency, right? If Bitcoin goes down, crypto is done. If Bitcoin goes down, sorry, blockchain, the crypto as a whole, blockchain might be there, but cryptocurrency is dead, is over. If Bitcoin goes to zero. So is that good? Yeah. It's like same example I give Amazon and Apple, right? Now let's talk about Ethereum. Ethereum, all these apps that exist, obviously they're not huge now, but they're still there, like things like NFTs, right? You have DeFi, which is, basically borrowing and lending in the crypto world. The leading aspect of that is Ethereum, right? There's a lot of stake even in the US with Ethereum. So if Ethereum goes down, then I'm not gonna lie, crypto is basically dead as well. So is that a good investment? I think so. Because remember what I said. Right now more than ever, you want to think about the projects that say if they die, will crypto go to zero? That's the question you gotta ask yourself right now. BNB. I don't like BNB crazy. There's a lot of opportunity. But in my opinion, BNB going down is like a 50-50. It's like I don't think crypto will go to zero, but I'm not gonna lie, BNB is very reliant. Like there's a lot of stake in like China and stuff. So China might be out of the game if BNB goes down. So is that likely to happen? If it does, it would be really bad. Would it kill the market? No. So that's why for me, BNB is like a 50-50, which I'm not really a big fan, to be honest. It's just not something, I guess, because it's not like US based. I mean, that might be it, right? But then you got to look at that. Then you want to look at something like Solana. Okay. You got to ask yourself, if Solana went to zero, would crypto die? Now, I think it would take a massive hit. Like crypto would take a massive hit. Like as in people would question crypto for sure. But personally, I don't think crypto would die if Solana died. It's kind of like saying, it's like saying this. In my opinion, Solana is like saying if I don't know. Let's think about a big one. If Tesla, which is not maybe not the same level, but let's just say if Tesla was to go to zero, it would take a big hit in the market for sure, massive hit. But would it kill the stock market? I don't think so. I don't think so. I don't think it would kill it, like meaning the stock market would die. It would take a massive hit, but it wouldn't kill it. There's other huge companies that would at least keep things alive, right? That's what I see with Solana. So am I saying Solana's a bad investment? No, I have some Solana. But personally, I'm starting to ask myself, if this comes back, personally, I'm going to be taking profit. And I don't know. I just don't really, it depends if Solana changes. I just don't see what I used to see with like Solana, like up here. Okay, so you got to keep worrying about that and start asking those questions. If the project was to die, would crypto still be here? And now all of these, in my opinion, would. The only one that I would put in the same category that crypto would potentially die or take one too big of a hit to handle is Chainlink. Okay? The only reason why I say this because Chainlink is running the data of the whole blockchain at this moment. Not just of Ethereum, of the whole blockchain. Every blockchain uses their data. So if Chainlink was to go down, I think it would be too much of a hit for it to recover from. So I would put Chainlink, even though it's not like the top 3, the top 4, the top 10, but I would put Chainlink in that category that if Chainlink went to zero, the blockchain, the cryptocurrency as a whole, maybe not the blockchain, but the cryptocurrency as a whole, like currency, would take a massive hit. And honestly, the blockchain would as well because we're relying on data. So you got to start asking yourself, and a lot of these, they're good assets, right? But a lot of these, the crypto market could survive without it. I'm not saying that's the reason to not invest in it, but I'm just saying right now, because of where the market is at, I would keep your eyes peeled with really maybe 3 to 4 cryptos max. And not just cryptos that have potential. This is not the time, in my opinion, to look at projects that have potential. That's not the time. My opinion is this is the time to be in crypto projects that I think will last the test of time. And then the ones that are named are a couple. There might be a handful. I don't know. There's not too many that I would have put in that category. I mean, Ondo I would put in that category, but not to the extent of that's different. But like if Ondo went to zero, crypto wouldn't be done, honestly. But Ondo is that project that is like the only better I would put, like a potential better, because it's so like using traditional finance. And for crypto to last, it has to use traditional finance. Like that has to happen for crypto to be where it wants to be. So that's why I think Ondo's a good one. It's not like my top 3. It's not like something like, but it is something that I think it would do that. right? So those are the questions you got to start asking yourself. And honestly, if you start asking those questions, you might realize that a lot of the cryptos that you might have, I'm not saying to sell them, but they not might be at the same level of importance than you think. Like Aave is a good one as well. Aave, I'll put it at the same level as Ondo. It's DeFi. It's the head of DeFi. It's very needed. But I have Aave. I have a good stake of it, by the way. But if Aave was to go to zero, DeFi would take a massive hit, but I think another project would come and take its place. It's replaceable. It is replaceable, to be honest. Okay, I'm not saying again. I have a big stake. I like Aave. I think Aave is. I mean, it is the leading indicator of DeFi. So DeFi is needed in crypto for it to be adopted, right? But I also believe Aave can be replaced. Okay. So it's more like a 50-50. I wouldn't put it like a top three. I would put it like my top five. But those are a couple ones that I wanted to bring up, and that's what I'm looking for. When I'm looking to DCA, I'm looking to DCA more of Ethereum and actually Bitcoin. I personally just give you my personal opinion. I want to see Bitcoin below here. I think it can happen personally. I don't know if it'll come all the way down here, but I think in the 50s. And personally, I would be DCAing in Bitcoin, which actually, I'll be honest, it's the first time will be me DCAing Bitcoin because I've been focusing on altcoins my whole career. But I think things are shifting, and I'm okay with being in a project that a 2x is barely an all-time high. That is okay for me because again, I really believe there's going to be a massive purge in crypto, and so it will create like a separation, kind of like people who invested in the big ones will see crazy ROI, and the people that didn't will see the biggest losses ever talked about. That's just kind of what I see. Is that gonna happen? No, I can't tell you that, but it's just from the leading indicators that I see, and for crypto to really last the test of time, I think something like that will have to happen in the near future. Okay, so hopefully that makes sense with a lot of you guys. Hopefully, you guys that was insightful. The last thing I wanted to bring up before we end the session, I wanted to bring up one crypto project because I saw this in my feed today. Actually, now my feed has it. Like one video, right? You watch one video on your feed, and then it's like the whole feed, right? But I saw that they just announced the next movies for Disney. Okay, so remember when I told y'all, I talked about the Disney movies that were coming out this year, right? Like the Marvel movies, the Disney movies, X, Y, and Z, right? And I was talking about Disney. Okay. Well, the thing is, I also realized that literally for the last couple of years, realistically, since this whole time, there hasn't been any crazy movies. Think about it. Disney movies. A lot of the Disney movies were like on hold for so long. I don't know why. Like it was just weird. Like, we had the franchise movies, and then for a lot of many years after, we had nothing. Right? There was nothing talked about theme parks. There was no upgrades happening. Like there wasn't really a lot of traction, right? And now they just announced, not even including the movies that exist this year, which is a lot of movies, but literally so many movies. I think it's like, how much did they say? Like, I saw a link over here. It said, I don't know. There's a lot of movies. I forgot the other one I had. Anyways, yeah, a ton of movies from 2027 to 2029. And these are like big movies. Like a lot of TV shows, Lilo and Stitch in 2028. A lot of like the Incredibles 3 2028, like X-Men, obviously the Avengers movies, the Bluey movie, which is going to be very talked about because kids love those, right? A lot of big sequels, like Coco 2 coming out as well, I think 2029, right? So what is Disney doing? They're preparing themselves for a massive revenue hit positively in the next 4 years. So me as an investor, I gotta ask myself, do I want to invest in a company that is about to release the biggest sequels probably in their history? From like all the big movies that they've made a lot of money with, they're releasing sequels. Obviously, they're gonna have revenue, even if the movie is not good. It's the excitement of it. Like Spider-Man just hit like the biggest. Like, let's look at this. By the way, Disney owns Marvel, right? Spider-Man movie revenue 2026. It's the highest grossing film of 2026. of this year, and there's been big movies this year, by the way, it's been the biggest, right? With holy moly, 1.82 billion worldwide. Now that doesn't all go to Disney, right? There's like, the movies. That's like straight like movie box office, right? But fam, that's a lot of money. Okay, obviously Spider-Man is one of the biggest ones. That's the need to watch it. So if you know me, do not spoil it, okay? But there's a lot more coming. We still have like the Avengers at the end of the year. Like, and the last biggest one was the Avengers. So imagine what's gonna happen in December. Like the awaiting thing, and I think Disney does really good for this. I think they did it on purpose. They didn't release anything on purpose. Because why? The longer you wait for something, the more you're excited when it comes. Like the World Cup. You wait 4 years for the World Cup, but when the World Cup comes, like everybody tunes in because it's been 4 years of waiting. Right? I think the psychology of that is so like smart. And we might be seeing one of the best runs since 2011. Because this is where all the bangers came out. Like you gotta really think about it. When did the bangers come out in Disney? These years, my childhood, were the biggest bangers in Disney history. And look what happened in the stock. So is Disney preparing for another generational run? And you might say, Gil, well, that's only a 2x-ish run. Well, fam, I'm here to tell you 2x's over the next 10, 15, 20 years, you're doing it over and over and over again. I'm here to tell you that's how people actually get wealthy. I'm here to also be the reality check. And this is my last message of the day. The reality check is this. You got to ask yourself, how have 99.9% of the population who are wealthy created wealth? It hasn't been fast. It was slow, but it was precise. Every single person that I've studied that I see as well, like the Warren Buffetts, and they invested, like let's say Warren Buffett, right? He's an investor specifically. Warren Buffett has invested in very little amount of companies over a long period of time. That's what he did. And I was watching this podcast here on YouTube actually, and it was this guy, this investor was talking about how most people are doing the opposite of what Warren Buffett does. Most people, most hedge, like people who invest people's money, right? They invest in many companies because why? They wanted to be diversified. Oh, I want to have companies in every industry. That's cool and all, but why is it that the most successful investor and trader, because he's a long-term trader, right, in history has done the opposite of that? Interesting. And the masses, most people diversify. Most people get taught to diversify. But the longer I've been in the game, actually, the more I've reduced my investments. And I'm actually going to be reducing a lot more of that in the next 6 to 12 months. Because I realize that. And I realize, and this is what the guy in the podcast said too, this is just things I'm learning. I'm telling you guys, you want to invest in no-brainers. I feel like a lot of investors think you have to always go for the lottery pick. You always got to go for the jackpot. But if you study people who have actually created wealth, most of them, 99.9 of them, did not hit the jackpot with one. Like they did, but it was like a more like a for sure type of thing. Like they invested in like technology. It wasn't like they invested in a meme coin and they got rich, which has happened for people, but not 99% of the population that has gone wealthy. Right? Like I'm just kind of giving you guys some things here. I'm not saying it's not possible. It is, but I'm here to say, would you rather look at how most people have done it, like the top ones, which is small group, right? Or are you going to do it how a very low percentage of people do it, and most of it doesn't even last because of the excitement of it? Remember, if something is up fast, the bottom, the retracement is actually most likely faster. Okay? So you want to ask yourself, what road do you want to take? And there's no right or wrong, in my opinion, because some people can take big highs, big lows, and then keep going like this. And that's fine. They keep going higher highs. It just look like more like crypto, right? Or somebody could take the stock route and look like the S&P 500. Right? So those are the questions you got to start asking yourself. If you want to be an investor in this game long term, start asking yourself, what are the projects that are a no-brainer? And let me put that bet on it. Because I'm not here to tell you anything, but I think the investment world is only going to go up. I think things are just going to get pushed up. I don't think things are going to zero. People have been talking about the U.S. crashing. The U.S. will crash when nobody expects it. Everybody's saying U.S. is going to crash. I used to say that last year, year before that. I don't believe that anymore. I don't. I just think that's like a thing for people to not get invested, to put scarcity. But when most people aren't talking about it, that's when I think things could see that. And that could be either in a lifetime or not. Okay. So with saying that, I appreciate you guys for being on today's call. I hope you guys learned some things. There's a lot of things to look at, in my opinion. Just stay very posted. If you're here within Powerhouse, stay plugged into the education. Start to study. Again, no brainers, and start to look at different things in the markets. You know, if you want to look at options, so with Patrick Kenny, start doing that. Start looking at things that are a little bit more. I'm not gonna say traditional, but more long lasting and being smart with your long term plays. And if you're not part of Powerhouse, go ahead and check the description. Once we post this, I'm gonna be putting in the description how you can actually see if you qualify for the community that we have and the way we've been able to help hundreds of people from all over the world. But with saying that, I appreciate you guys. You guys have a great weekend, and we'll see you guys next Saturday. Okay, appreciate you guys. You guys have a good one, and peace.